Hi everyone. I'm Mohit Madan. I'm the CEO and co-founder of Oro Pocket. I'm really grateful for this opportunity. It's truly an honor to be here. I'd like to talk about the current traditional markets around the globe. So, about $300 trillion of assets are traded every year. And we believe that in the next 10 years, about 5% of it is going to adopt blockchain in one form or the other because of the salient features that blockchain brings in. And we basically want to be the enablers to do that. Right now, the problem with the DeFi space is that institutional funds and large investors are not able to participate in it for several reasons. Like there are only a limited number of asset classes. There is no clarity when it comes to compliance, right? So, like large hedge funds or institutions aren't going to put up like $10 million when they don't even have any clarity on how or when they can get that money out. There's huge price slippage. So if these people like put in an order for a couple of $100,000, they know that the needle is going to move wildly. There are not a lot of financial instruments or tools available. Everything is scattered, and basically operating is a challenge in itself. There's a learning curve there. So we are basically trying to solve these problems for these institutional investors uh, by in two ways. First, we are tokenizing real world assets such as gold, silver, stock, exchange traded funds. We're also looking at NFTs such as real estate, energy, art, commemorative coins, and things like that. And then basically building financial services on top of it, such as loan, yield, card, asset backed card, and things like that. So basically, this is what the architecture of open DeFi currently looks like. We take these real world assets, we tokenize them and add them to the network, and then we basically start building financial services on top of it. So let's take this network apart. Let's just understand how or what works. So the most important part of our network is the tokenization bit. So in order for us to tokenize any real world asset, we basically need three parties. We need an insurer to make sure that the underlying asset is 100% protected. We need a custodian so that the tokens can actually represent the rights to that asset, right? It's only then that we can attract institutional investors to be a part of this network. And then we need an auditor to make sure everything is running smoothly and them regularly publishing their reports. So once we have these three parties, we simply tokenize the assets. In our proof of concept, we have been able to tokenize gold and silver. Once the assets are tokenized, we start building financial services on top of it. So let's look at some of the financial services that we're currently building. So the first is the easiest one, exchange. But instead of order books here, you're actually exchanging with the smart contract itself. There are no counterparties. So the advantage of this is even if you're buying for 1 cent or you're buying for $1 million, there is no price slippage, right? So institutional investors can actually put up big orders without having to worry about the needle moving widely. And because there are no other counterparties, essentially it's a risk-free trade. You don't really have to deposit your funds to any exchange per se. You can do it via a non-custodial wallet. So the way that this works is you send it USDC and it'll revert back the equal value in whatever tokens that you're currently willing to buy. So let's assume that this smart contract represents gold. So if you were to send it like 10,000 USDC, you'll get $10,000 worth of gold. And every time these transaction happens, a small fee of 10 to 100 bips gets deposited in the fee pool, which is going to become really important in the coming slides. By the way, this transaction works the other way around as well. So in case you want to liquidate your position or you want to sell gold, you can simply send it back to the smart contract and immediately get the USDC out at the current rate. So for getting the price of the underlying assets, we are currently tying up with Chainlink, with Band, with Razor, and we are operating on various networks. So that's basically the first feature of it. Now let's assume, say, David here got like $10,000 USDC and he's just purchased gold worth $10,000. Essentially, there are three things that he can do with that gold. First is he can just keep it to himself or send it to a friend. Second is he can instantly post that gold as collateral and get up to 70% of it in USDC in absolute real time in a seamless manner at a very low interest rate of 2 to 5% per annum, right? So let's assume that he had $10,000 of gold. He'll get about 7,000 USDC at like a low interest rate of like 2 to 5%, right? So all he needs to do is take that $7,000 to Bank of Hodlers, Abra, or any of these platforms that give you an upward yield of 10 to 12%, so that he can pay back his loan while still making money on top of it. All this time, his bets are completely hedged because he's still holding gold, right? So that's one easy way for hedge funds to participate in this network, one way for these institutions to come on board. That's basically the second thing that you could do with your gold. The third thing is If you don't want to take a loan, you can simply post your gold as you can basically stake it on the network and earn a yield on top of it. In this, there is no market exposure to the gold. So even if the price of gold go up or down, you're still making money. Essentially, you're generating a rental or yield on an otherwise dead asset, right? This is critically important because economics teaches us that uh, capital flows wherever it gets the best return at the lowest risk. And by eliminating the market exposure and by offering a yield on top of these underlying asset backed tokens, essentially we are enabling users to generate more or passive income source per se, right? So the next feature on our network is basically the cross-chain functionality. So Ethereum is currently batshit crazy when it comes to transaction fee, right? And then we have great chains like Matic, Tezos, Algo, and so on, right? But they don't have many users on those chains because they don't have a lot of assets. And it's a chicken and egg problem, right? So we are trying to solve that problem by enabling instant uh, movement of assets across chains in a completely seamless and decentralized manner. So in this example, USDC is currently being moved from Ethereum to Matic chain, again in a completely decentralized, seamless manner in real time, right? So this basically allows us to get best of the worlds. Like we are able to process transactions quicker and at a low cost and do microtransactions with Matic. We are able to do better on-chain governance with Tezos and so on and so forth. So, talking about the competition, so of course, because the total addressable market is so huge, we have competitors. The nearest competitor that we have is synthetics. Now, the problem with synthetics is because they are not backed by real world assets, essentially because they're only a representation in price, whenever the price of the underlying asset goes up, essentially their entire network goes in debt, which is distributed to all the network participants, which makes it a negative sum game. Whereas on our platform on OpenDeFi, whatever asset you're holding, you'll be able to generate a yield on top of it, which makes it a positive sum game. Apart from this, fungibility actually exists. So you can actually convert your gold tokens into physical gold itself, right? We work on distributed governance. Everything is 100% insured. And basically it has like inbuilt hedging functionality and things like that. Now, the big question, a lot of the viewers here must be traditional investors trading in stock market. So why should they even consider trading on Open DeFi? Why not just trade on NASDAQ or London Stock Exchange or any of these exchanges? See, there are several reasons. First is you are able to generate a rental or a yield on top of your assets. So let's say if you were holding Apple stocks, nobody's paying you to hold those Apple stocks. Whereas on this platform, you're actually getting a yield without any market exposure. Second is you don't really have to worry about a bad news coming in on Friday and how it's going to affect your position on Monday because this works 24/7. It's round the clock. It's inclusive. Third is you really don't have to worry about the price slippage at all. You place it on order for $1, you place an order for $1 million, you're going to be quoted the exact same price, right? Which you won't find in your traditional markets. Everything is completely transparent, microtransactions enabled, and we have very low fees. So talking about the roadmap, we're already done with our seed funding. We're already done with our proof of concept with gold and silver, and the mobile apps are live on both Android and as well as iOS. In Q4, basically in this quarter, we've concluded our token sale. We've done our token generation event. Thank God it went well. We are now working on releasing the alpha version of our testnet. And once we have the bugs figured out there, we'll be sending it for review, basically to an audit firm. Q1 and Q2 are purely focused on adding more asset classes and building more financial services on top of it. So talking about the team, this slide is a couple of days old. We have now added, in fact, 3 more members. So Tarusha and I have known each other since, I don't know, we were 7 years old. We've been working together for the last 8, 9 years. This is our third startup together. I take care of the technology side of the business and Tarusha manages everything else, operations and everything. Our team is purely distributed across the globe. It's a very close-knit team. So we have team members in India, Egypt, South Vietnam, Ukraine, Hungary, US, and I'm Nigeria. I'm pretty sure I'm missing out on a couple of countries here, but wherever we find good people to work with, we simply onboard them. So talking about the underlying token itself, it's a governance token. We did a raise of about $1 million just a couple of months back, and we were able to onboard some of the best investors from India, Valley, Europe. So we have like Moonrock Capital. Somebody was talking about Charles here, so Charles is also a part of this. From Raystone Capital, we have Lotus Capital, of course, ONX, TDeFi, TRG Capital. TRG Capital is everywhere. So all of these great ones. We basically did our TGE on the 13th of November and had about 15 million in volume on day one. We're currently trading at about 12, 13x. And just this week, we'll be listing on our first centralized exchange. It's a tier one exchange. So the entire idea of Oro is it's a breathable economy. It contracts at one end and expands at the other, thereby making sure that it's less prone to any bumps and dumps and actually can be scaled to a longer period than just a bull or a bear run. So that's pretty much about it. Happy to answer any questions that you might have. Thank you.
Awesome.
Yeah,
it's fantastic news about the tier one exchange as well this week. Breaking news here on the TDeFi Summit.
Yeah, absolutely. Yeah, thanks for the kind of very comprehensive pitch there. I think there's probably a lot of questions to be kind of followed up with on that. Maybe I'll start with a few myself. So one of the things that I found particularly interesting in this project, and for full disclosure, I was an investor myself too, was the fact that there's some real world utility. Do you think that one of the reasons why you have had so much success in terms of performance is because the market is now kind of more ready for that kind of transition to finding real world utility within this space?
So I think there are three components to it. The first is absolutely. So we did get lucky when it comes to time and execution, right? We entered this space when the people were ready. They were understanding how these assets work. They were looking at assets beyond Bitcoin. Second is that it's not just real world assets that we are trying to bring to the platform. So we'll have wrapped assets as well. But we wanted to start with the lowest hanging fruit, right? And that in India has always been gold. So if you speak to anybody regarding investments, the first thing they're going to talk about is gold. And we wanted to see whether we'll be able to get response from the audience or not with just the basic platform. So because we were creating an MVP, we wanted to get done something that can be quick, that can be efficient, and be measurable, right? The third thing is the great support that we receive from the community and the feedback, continuous feedback. I think all those three things, yes, do point to the fact that this was a good time to execute it and the market was accepting of it. And thank God for that.
Yeah, absolutely, absolutely. So maybe I appreciate the kind of the overview, and it was really helpful. Maybe just talk on a really practical level. Let's say somebody had, as you say, they're currently holding physical gold, and as you say, physical gold really has always been traditionally being seen as like a store of value against, deflation, or kind of the worst of days, so to speak. And I know India is a particularly big market for gold, and I think that's been a long historical thing. But even outside in more Western cultures, having gold and things like that, from a fund management background myself, we used to always encourage to have a percentage of the portfolio in some kind of physical asset, for kind of like a more of a securitized structure. So how would that work? Let's say you're an individual, doesn't know too much about cryptocurrency or blockchain right now. They've just come across yourself, looking to get involved in the cryptocurrency. Let's say they've got $10,000, for argument's sake, sat somewhere in a gold vault or a bank. How would you, what's the process in terms of simplicity? Let's say you're an individual.
So that's really a great question. See, access has really been very important to us, and along with it, the user experience. So we've tried to make the entire thing as accessible as possible. So we are available on web, on Android, on iOS. All the person needs to do is simply download our application, which is called Oro Pocket, and they can just purchase gold, silver, and soon other assets as well, using just a click of their button. They can pay via SEPA, via credit card, debit card, and other payment methods as well. And soon they'll be able to, with a click of a button, stake it on the app itself and earn a passive income source, or earn basically a yield on top of it. All the features would be accessible right at their phone. See, the idea is for the end user to be a bank within themselves, right? To have complete control over their finances.
Sounds exciting. And where is that gold actually physically? Is it physically held somewhere that you have custody over? How does it work?
Yeah, so currently we have 3 vaults, one in UK, one in Switzerland, and one in Singapore. Our India vault would be starting soon as well. So the idea here is the more number of vaults enable us to basically be fungible, enable us to ensure delivery of the physical assets itself. So if somebody was more comfortable in exchanging their tokens for the physical gold, they'll be able to do that after paying, of course, the minting cost.